Hello, everybody. I am so excited about today's podcast. This is podcast number 6. Thank you for joining me, whether you're joining me live or watching later, especially since today's the Friday before Labor Day weekend. I know everybody's excited about getting away for the weekend, but I'm excited about today's podcast. Today on the podcast, I'm going to bring Dino on in a second, but I'm going to first mispronounce his name, and he can correct me when he comes on. But I have Dino Katsiametis from Ethos Lending, and I'm really excited to have him on. And what Dino is trying to do is he's trying to transform the broker space. And why I'm really excited to bring him on is the people that watch this most likely are IMB loan officers, IMB suite, IMB managers. We're pretty much in the independent mortgage banking world. I know a few of you are brokers out there that follow my stuff, but so I really wanted to get Dino on and have him educate us about the broker world so that we are familiar with it. And then I also want him to talk about how he's going to try to transform not just the broker space, but lending in general. And he has a lot of really great ideas. So with that, I'm going to invite Dino. Dino, first, correct me how I said your name. I apologize. You say it so well. Of course, it's your name.
It's Katsiametis.
Katsiametis. I'm going to keep working on that. And thank you for making time a Friday before Labor Day. It's very generous of you. And let's get right into it. Let's start talking about you. You're the owner of Ethos Lending. And prior to that, I think it was called California Coastal Loans. So you've owned your own company for a long time. Go ahead and why don't you tell us about your company, a little bit about yourself and your company.
Yeah, we've always just been a boutique style mortgage brokerage firm, right? And be honest with you, not only were we only licensed in California, but really the majority of our business was done within 20 miles of our office all the time. We had an office down in San Diego, the people down there, same thing, just San Diego, me here in Orange County, just Orange County, a little bit here and there outside of that, but that's all I ever cared about, right? It was always more of a top producing loan officer, and that's all I wanted to do. And I kind of thought I was on the back nine here of my career and was starting to take it easy. And then something just happened on December 27th where I absolutely got bit by the bug, and I decided to come back full force and full time again and start hustling to grow and convert from California Coastal Loans to Ethos Lending, become a national mortgage brokerage firm, and bringing in some new things to the mortgage world that I am beyond excited about, and I'm hoping are industry changing.
That's awesome. And you were quite the accomplished loan officer back in your prime. Is that fair to say?
I think so. I mean, I cared for my clients. I did a good job for them. And I was, 100% referral based, never advertised. I don't have anything less than a 5-star, review on Google or Zillow or Yelp. And it was a good career. I encourage, one of the things I'm trying to do now is also encourage younger people to get into it, because it is a great career when you do it the right way.
I've been in the business so long, it's been so long since I originated that there wasn't a Yelp to have reviews when I was a loan officer.
Both of us used to take applications by hand. So
triplicate, right? And the little triplicate form, and we would not get old men. But and then the other thing is that I've been really impressed about you is you're one of those people that work hard on your craft, mastering your craft. You get coached. You're in mastermind groups. You are a frequent attendee at conferences, and that you also seek out industry leaders and really engage them. And I'm super impressed like that. For example, I believe you're in Todd Duncan's mastermind group. Is that right?
I am, yeah. And not only was it fantastic for me, did I learn quite a bit, met some great people, got a lot of great ideas from all of them, but it also changed my life at home as opposed to just business, right? So when you're in constant pursuit of learning, of knowledge, you will better yourself in multiple ways, not just the one way that you're seeking.
Yeah, that's awesome. Okay, let's start talking about the broker world. And what I hope we can do is just kind of paint a picture for that IMB person, whatever their position is, that listens to this. And the role you can play is you can share all the reasons why it's great. And then I'm not going to be a critic or a cynic, but I might just have questions that show the other side, not critically, but just comparatively, right? And you'll see it'll be very collaborative. And as most people know, I was born into the mortgage world, in the broker world, and I was a broker for quite a few years in San Diego with my brother's company, and we built what I believe was the largest brokerage company at that time in San Diego before we sold to a bank. And so I have broker in my blood, and I have an affinity for it. So this won't be this won't be an adversarial conversation, but it will be a well-rounded one. So with that, tell us how the broker world's doing today. What's going great? What's its advantages, if you would?
Yeah. So I'm going to start with just saying that I can have a lot more fun in the broker space than I can in the banking space, right? I've been in both, and brokering is just more fun. So I'm going to start there. I'm gonna turn it and say that I believe we have a lot more flexibility and a lot more options. So that kind of like no matter what comes our way, we have more options to deal with them. The other piece is, and this is probably my favorite, but when you're at a big national correspondent bank, you are their employee. When you are a broker and you're trying to get a loan to go through, you are the bank's client and they are fighting for your business. So that's probably my most favorite thing. I love when they fight for my business and they give me options and they give me, little perks here and there to bring the loans to them. So that's the kind of thing that I feel makes the broker space better, which also in turn makes it more fun. And then we have, just as far as pricing goes, and I know we've talked about this, and you have your response, and man, you always have a response. But I feel like in the broker space, you are as close to the well as possible. The margins just aren't taken away from you from middle management, from branch managers, and regional managers, and area managers, and all these different people. Now, I know a lot of that is changing. In fact, I've heard some of the big companies are already getting rid of middle management, right? Because they have to in order to compete. But those are the overall things that make me love the broker space. And actually, one last one. I just today, I think, or yesterday, UWM released a study that they did, and we all know when one does their own study, you never know how things are skewed. But they did say something that, on average, a consumer that used a mortgage broker saved about $10,000. So, if that study is accurate, I would say that's a perfect example of how using a mortgage broker is better.
I read that when it came out yesterday. I saw the article in Housing Wire, and Housing Wire was completely transparent about this. Was an article driven by United Wholesale Mortgage. But when I read that article, what struck me is $9,000 over 360 months is really inconsequential. And wouldn't really be a deciding factor. Better advice, better experience. Which I'm not saying that a broker can't provide that, but $10,000 over, if you figure 360 payments of $3,000 a month, I don't think it was as big a deal as they were trying to make it out to be. But you're right, they did bring that out. I will tell you, I was having a conversation with IMB owner recently, and one of the things that they're really challenged by is they're stuck in their model and platform, meaning they have an established expense stack. They built their company a certain way, and it's very hard for them to pivot, because they don't have alignment with all their employees, and they'll have retention issues if they try to change. And so their feet are in concrete, responding to the market dynamics. Where in the broker world, I think one of your guys' strength, and you can speak to this, is you can be exceptionally nimble. Is that correct?
Yeah, I think that's a huge piece of it, right? We can easily be more nimble, but I also think that somehow depends on size, right? When you're a much larger company, it's hard to just turn on a dime, right?
Yeah.
As a broker, we typically aren't as big, so it's easier to turn. The other piece of it though is so much of the broker world is independent contractor 1099, and this is where when I was on the IMB side, right, I sat there thinking, why am I paying this person? As the branch manager, I had to pay somebody for not closing a loan. I couldn't fathom it because I had always been in the broker space, and in my eyes, you don't get paid unless you close a deal. Only closers get paid, period. Right. And here I am not only paying them, but I'm paying for their insurance, I'm paying for their mortgage coach, I'm paying for their Encompass, I'm paying for, then they come to me and say they want to do this marketing thing because it's going to grow their business. And I'm like, I'll stop. I'm already getting fired up, but we're back in the broker space where it's like, you want to throw up a donut, you're not going to get paid. That's your problem. Like you got to be a big boy to play here. And then to address one thing too, and we've talked about this, but I think it's really important to say it doesn't matter where a good loan officer is working, broker side or, correspondent side, right? IMB side, whatever you want to call it. A good loan officer will always produce the best quality results for his client, no matter where he's at.
Yeah, I agree. Dave Savage hosted a panel at, I think it was the Mortgage Summit in Las Vegas. I think it was, or Mortgage Mastermind Summit in Las Vegas. And the panel's main question was, which lending platform will win in the future? And he had somebody from broker, and he had somebody from IMB, and he had somebody from bank. So he had four people all from different disciplines. And the universal answer was, it doesn't matter. The only thing that matters is the quality of the loan officer. The quality of the loan officer will win on any platform. And so it's so true. But I want to go back to what you were talking about, because I really think one of the advantages that the broker world has is it's limited risk or exposure to inefficient or unproductive expenses. Because in an IMB world, we have to build a whole infrastructure to support our employees. Like you said, we got to pay a minimum wage draw. We got to pay benefits. We pay for all their marketing. We pay for their assistants. Oftentimes, we pay for their credit reports. We pay for their work number. All of that stuff we pay for, whether we close a loan or not. Right. Yeah. And so there's a massive overhang of unproductive expenses. The advantage that you have is you don't, as a company, you don't pay any of that. Like, that is all loan officer expense. And so you don't have any of that drag on your pricing, that expense drag, because you're not dragging around all this unproductive stuff. Now, as I say this, I'm going to get your feedback on this. I can tell you the IMB loan officers that just heard me say that would be freaking out. If they thought they had to carry their expense load every month, whether they close the loan or not, would freak them out. Yeah. But what would you say to that?
Yeah, I would say it should freak you out if you're not closing loans. And if you're not closing loans, then, maybe you should be doing something else. A loan officer that's closing one loan a month is doing just fine as far as breaking even for the company, right? Like that's really what it is. It's, you got to at least close one loan just to break even. And we're not talking like $150,000 loan either, right? It's got to be something significant. But I'm not looking to be the biggest mortgage brokerage firm. I do want to be the best. And I'll tell you, one can say they have 1,000 loan officers or 2,000 loan officers, and they close X amount of deals. And the one I'm impressed by is the one that says they have half the amount of loan officers and closes the same amount of deals, right? That's what's important. And with the market being how it is, I think we've probably diluted out some of the lower end. But as we all know, they'll get back in again when the rates drop. I just think that it's time to turn our space into the next revolution of what a loan officer really is. And that's a true professional, right?
Yeah.
A true professional that is respected because he knows what he's doing and he's treating his business like a business instead of a job, right? And he will go to all extremes for his client or her
Yeah.
client.
Yeah, I like that, and let's step into scale a little bit, because from what I've seen, there's a lot of positive broker world, but we really haven't seen a significant broker platform come to market with highly productive loan officers. Where you have some IMB platforms where the average loan officer is closing 6 loans, 8 loans, 10 loans a month. That's rare because the national average is 3. But you have some platforms outperforming that. I haven't seen that from a broker platform before. By the way, this is going to lead us to a really positive place. But why do you think that is?
I think because a lot of the good brokers are probably doing it themselves. It's it's easy enough to have a small shop and do it the way you want to do it and be successful. I mean, it's what I did, right? It's my broker shop grew on its own without me ever once trying to recruit anybody. I just focused on my personal production and was trying to be a great loan officer. And I think that attracted some people. And then, some people have come in. I've trained them. I helped them grow, and a couple of them have gone out and opened their own places, and that's fine. You can absolutely do that. And I remember when that happened, I thought to myself, what's the point in trying to grow a broker shop? Because, and I'll throw them under the bus a little bit. And heck, man, I actually had this heated conversation because I was so heated with Matt Ishbia at UWM. And I said, I can't believe you guys are approving these loan officers that are closing at best 1 loan a month to be independent brokers on their own. They don't even know what they're doing. I know people that opened up their own brokerage shop had never done a loan in their life. Like, how and why would any of these wholesale banks approve them? And his response was, well, if I don't, my competitors will. And it's like, let them screw up their pipeline with bad loans and bad everything, right? Like, why don't you stick to the better ones? And I said, you should be promoting them to come work for guys like me, right? They can teach them, they can help them grow as true professionals. And that's a really big thing for me that I do hate about the mortgage business. The barrier of entry is a little bit lower. And because of that, I have seen way too many people get in that they shouldn't be. Now, kudos to UWM because they have made it so easy that even somebody who doesn't know what the heck they're doing can actually do a loan. They do it all for you. But I don't think, and I don't care, because that's not how I do business. And that's not how I want my clients to be treated. So I'm just going to let them do what they do, focus in on, growing a real business with real professionals, treating their clients the right way. Right. And it's not a one and done deal. It's a lifetime gig when you get a client.
Yeah, that's awesome. I just got a little bit more exploration on just the broker world, and then we're going to get specific into value props that you're building and the things that you stand for. And you mentioned something that you said, United Wholesale Mortgage makes it so easy to do a loan. And I think one of the things that IMB people would be surprised at is how easy it is to do loans in the broker channel. Because when some of the first feedback I get when an IMB loan officer goes out to a broker, the first thing they say is, "You can't believe how easy it is to do loans." Is that really the case?
It is. It is. In fact, I'll also go ahead and say, processors have always been hard workers and really the backbone to producing a loan, right? Processing has become so easy with UWM that a lot of the loan officers that really they suck, they don't even know how to do a loan are actually processing a loan themselves on top of it, right? So it really is that easy. The funny part is, though, if you try and tell them to go take a loan somewhere else, they won't even know how to do it, right? They don't know how to get a loan through. That's how easy UWM has made it. Rocket is, on their doorstep. Their technology is really good as well. A lot of the other banks, New Res is getting good. A lot of them are getting really good, but it's significantly easier to do a
What
loan.
happens if you have a bad loan?
What's that?
What if you get a really tough loan? Easy, hard to do? Because what I would say to IMB, that one of the secret sauce to IMB is we can get you really tough loans done, right? And we can get them done quickly without, extracting, a limb from you. How about on the broker world? What would you say?
So I'm sure it's a little different everywhere, but let's just say today, and I'm going to answer your question in a second, but let's just say today I received 100 loans and I was able to set them all up and submit them to pretty much anybody in the IMB space. I don't know how long it would take them to approve all 100 loans, but if I sent them into my wholesale channel, I'd have them all back in 24 to 48 hours, max 48 hours, approved, ready to go. And then to answer your question, I believe it's easier to get a hard loan to go through because once again, I'm going to go back to that statement I made in the beginning. They are fighting for my business. And oftentimes they feel like, and this is granted, because I've always done a lot of volume, they fight a little harder, right? They feel like if they can push this one through for me, I'll get them more business, right? And they're not afraid to ask for it, and they deserve it, if they can push some hard things through. But it's a lot easier to push hard loans through. And then let me kind of like say this, because I think this is important too. I learned this a long time ago in my career. So to any loan officer, the easiest way to be more successful is to not plague yourself with a bunch of hard loans. Start going after clients that are easy. I've given this one little piece of advice to a multitude of loan officers. Like doing loans, it's like you decide you're going to go fishing and you're going to go lake fishing, right? So you go down this one long road, and at the end of the road, it spreads out and it's got signs, right? There's salmon over here, there's bass over here, halibut, there's mackerel, there's sardines. Like there's a whole bunch more sardines, there's a whole bunch more mackerel, but do you want that or do you want halibut? And you might as well go where the halibut is or the fish that you like and start learning how to fish there, because it might take just a little bit longer. But once you become a good halibut fisherman, you're going to be eating like a king all the time, right? So same kind of thing is I got to a point where unless it was a past client or a referral of a client that was really important to me, I would actually pass on a lot of the hard loans because I didn't want to slow down my production on the back end with processors and all that. And I didn't want to put myself in a situation that would make me look bad or give me anything other than a 5-star. Now, keep in mind, right, in the younger years, you take those suckers on head on because that's how you build your reputation. That's how you get ahead. But, at some point when you're ahead and you have a lot more customers to deal with, you got to kind of pick and choose what you want. When I made that switch years ago, all of a sudden, man, every one of my clients was perfect. It became the perfect client referred another perfect client who referred another perfect client. That's the way to go. Set yourself up so you're fishing for halibut.
Yeah, no doubt, and good advice. One last thing on the broker world. The last significant broker business any of my branches did was with Union Bank, because they had a lot of specialty product, and our company allowed them to broker. Our bank allowed them to broker Union Bank, and that would go into loan would go into a black hole. You never knew what was going on, and they had cul-de-sacs where if your loan didn't work on the conveyor belt, it just went to a cul-de-sac and died. Like you didn't even know what was going on. Like you couldn't penetrate the fortress and go, "Where's my loan?" Does that still exist in the broker world today? Do you get loans that get stuck in a cul-de-sac, or do you have somebody to call to help you? Like, can you go, hey, help somebody?
Yeah, the bigger banks have systems in place, and it's being more of an old school broker in the beginning. That was very frustrating for me because I wanted to talk to somebody so I could win them over and I could get them to verbally tell me, "Don't worry, Dino, I'll take care of it." Right? I needed to hear that, and these bigger organizations like a UWM and a Rocket, it's not as easy to do that because there's systems, and I'll tell you this, that once I matured even more as a loan officer, and maybe just getting older in general, I realized that those systems are super important. And I realized if it doesn't, like, learn what their system is, right? And don't try and force stuff into it that doesn't work. Just it's same back with fishing for halibut, right? Like, just put in what works. It'll fly through in 2 weeks without you even having to push anybody. If you got a hard one, go to one of the banks that you can have somebody there that's fighting for you, that's physically pushing it through.
Yeah, if you have a high maintenance loan, take it to a high touch lender.
Yeah.
Yeah, but you know what I'm hearing you say, and this is a really important delineation. What you're telling me is good, procedurally good loan officers thrive in the broker world. But if you're a hot mess, which a lot of loan officers are a hot mess, you probably aren't going to have such a good time in a broker world because there's nobody there to clean up your mess, right? If you just have, like, you vomit your file into a system and it's all screwed up and you don't understand the income and you don't know how to present a file and you don't have documents, you probably want to avoid the broker world. That's what I'm hearing you kind of outline. Is that right?
Well, I didn't quite say that. Now, if you're working at my old company, then the answer is yes, because I this is what I would tell them. It's like, look, I'm doing my loans. You can work here. It's your business under my business. I'm not going to hold your hand. I'm not going to do all your work for you. If you can't do it yourself, then this isn't the right place for you. Now, in our new world, we are trying to bring in the new generation of loan officers. And what that means is we're creating an academy so that we can teach them properly all the way from A to Z, but also best practices and a million other things, right? But we're also bringing in the LOA, position, not just for the loan officer that does a lot of volume that can afford to do that. We're bringing it in for everybody and saying, you may not be able to afford a full-time LOA, but you can utilize hours for a fee, right? But you can utilize hours. And then the way I look at it is I want every loan officer to get so good at their trade that they can be considered the best, right? Like, there's always somebody better, but be considered darn good at your trade. And then learn about processing, learn about LOA, learn how to kind of do all of it, but don't worry about it all. As soon as you learn it, put it on the back burner and get even better at being a marketing expert. Because if your phone doesn't ring, it matters zero how good you are at doing loans. So learn your trade, but become a better marketer than a loan officer. And then have your team doing it all. The LOA will clean up a nasty file and put it together beautifully, right? A processor will overlook it, clean it up a little bit more, get a couple missing pieces, submit it, and be done. Now, if it's not a doable loan, we got to teach that loan officer to not bring a bunch of junk into the system. But the system, right? And again, like going back to being a more mature loan officer now, building systems, the system will clean that up and produce something good or spit it right out.
Perfect. All right. So that Dino, that was awesome. I think you probably really gave a really good view of the broker world for probably a lot of people are going to end up watching this that they're not as familiar, don't have recent history. So thank you for that. But let's get into the exciting stuff, which is the things that you're trying to build at your company, which any company can build. It doesn't matter what the model is, but almost any company could build. And so you are very passionate about building value props for your company, and that your company stands for something. And so I got a whole list of them here that we're going to try to get through, but let's just start how your basic, operating principle of your company is mortgages under management and customer relationship. Do you want to kind of walk us through your vision on that?
Yeah, for sure. So this is one of all the things that we're doing that I'm probably the most excited about. It's also the hardest to put together, the most expensive to put together, and the scariest out of all of them. But I truly believe this is industry changing. So a financial planner has assets under management. And as he builds his assets, right, every time he gets a new client and invests $1 million, just like that, he grew his AUM, and he knows approximately how much money he's going to make. And he knows at one point when he gets to a certain level, how much that book of business is worth. An insurance agent has his annual premiums. And every time he adds another client to that premium, he builds his book of business. He has a reoccurring revenue, and he has an asset that he's building that's worth money one day. A loan officer, and a realtor for that matter, can, no matter how good you are, if you ever want to stop doing loans, you stop. You're done. There might be some backdoor deals where you have a junior LO that had been on your team, an LOA had been on your team, and then you help them grow, and then he's going to give you a little something on the side. And, there's all sorts of little things like that, but the majority of them don't work. And there's a few really big things that I'm going to get to in a second after I explain what the MUM is, mortgages under management, MUM, right? It's for the first time ever, a loan officer closing a deal and throwing it up in the MUM category as an asset. It's not only as good as your last deal type of a deal anymore, right? With the way we do business, the way pretty much any top mortgage loan officer does business, right? They keep in touch with that client. They know everything about that client. They make sure they get the refinance. They make sure they get the investment property. They make sure they get their kids' loans, their friends' loans, everybody, right? So that's our style of doing business. That's how we do it. Now, the mortgages under management, every time you fund a loan for somebody, it rolls up to your MUM. Every month, by nature, that MUM drops down a little bit, right? Because of amortization. But every time you fund another loan, it goes up. Now, what we're saying is, as a company, when your MUM gets to a certain number and you've been with us for a certain amount of time and you've done business across the board this way, we will put a dollar value and associate it to your MUM. So as a loan officer, one day, if you ever want to retire, you don't have to walk away. You don't have to try and figure out some sort of backdoor deal with somebody. We know what your book of business is worth. And it'll first go up for sale to all the loan officers at Ethos Lending. As a company, we're going to offer financing to them to help them buy it out. And if nobody wants to buy it, contractually, we're going to agree to buy your MUM. So for once, a loan officer can act like a real professional, right? If he's not a real professional, his MUM is going to be worthless. But if he's keeping in touch with his clients, if he's doing annual reviews, if he's sending, birthday cards or gifts, if he's sending closing gifts and, various things, if he's got 5-star reviews, we're going to be tracking everything from how many referrals do his clients give, right? I mean, if your average is like 3%, then your MUM isn't worth that much. But if your average is 20% based off your database, your MUM is increasing in price. If your average age of a client is 55 or 60, well, your MUM may not be worth as much as if your average age is 40, right? Because you got more years to go with them. There's all these factors that we're putting in, and it's a beast of a project that we're dealing with. But we are, and this one's not live yet. It's on the roadmap, but it's close. But it is a game-changing, industry-changing thing that we're doing, because a loan officer for once will have an asset that he's building with every loan that he funds.
Yeah, that's remarkable. And just to back up a little bit, so first, the mortgage under management, first comes to tracking, and then you're really investing in technology to manage all this. But then there's a customer contact system that has to be executed. And then I love how you put weighted values to the value of the MUM based on the productivity of it and all sorts of other stuff. And then I love how you monetize it. That certainly would be attractive to a loan officer that probably doesn't have an exit strategy.
Yeah, and it's not going to be for the loan officer that works at Loan Depot, right, or one of these other places that it's a lead gen machine. This is for the loan officer that's running a business for himself, right? A high end loan officer, and we're not saying you have to already be there. We're willing to train you. We believe that our systems that we're creating will be able to teach any loan officer how to do this. Now, by all means, not every loan officer is capable, right? It is a unique breed of person that can accept the fact that he's not going to make any money unless he closes a deal. But when you do, you're rewarded handsomely and you could build a real career off of it. And that's the one thing that I know myself and a lot of other loan officers that I value as high-end loan officers. They've built a career. It's they never worry about if they're going to close a deal or not next month. They've graduated way beyond that because they've built an incredible machine of, referrals coming in constantly. And that's what we're trying to teach everybody.
Yeah, it's amazing. This concept of mortgages under management has been around for 25 years. Todd Duncan was beating the drum heavy 1999, 2000. And the people that, associated back then, Jim McQuaig was big on mortgages under management. And I've heard this said repeatedly, but I have not met one loan officer that can tell me how many mortgages they have under management in a dollar. They can't tell me. Like, is it 100 million? Is it 10 billion? Like, how much do you actively have under management? And it's so surprising. The other thing I love asking loan officers, what's the annual or yearly value of your book, right? If you have 1,000 clients, are you getting a 1% return? Like, 1,000 clients get you 100 deals a year, 1,000 clients get you one deal, and they can't tell me that. And that really should be built into the business plan. You should know what your database is yielding you, right? And to your point, that becomes the basis of your business and also becomes a benchmark on whether you're doing it well or not well, right? Because a highly productive, really productive loan officers might get a 7% yield, meaning that 7%, say 100 loans net 100 clients net you 7 deals a year. Some might only be one, but once you start tracking it, you can then know whether you're doing a good job or not, or whether you can get better.
Yeah, and I'll venture out to say that no matter, and that's so first of all, mortgages under management, we've all been doing it, like you said, the ones that have been doing it for a long time, right? We just do it the old school way by keeping in touch with our clients and hustling and working hard. Truly tracking it has been virtually impossible because of technology. It's just too many different systems. It's impossible to know everything. And that's where we're really investing our money right now in technology. We're building our own technology stack that is going to be able to track all of that stuff. Without it, it's virtually impossible. Right. So that's the big piece. And then you were talking about just, how everybody's been doing it. And I'll just give a few props here. Even though I've been doing it per se, it was at the Todd Duncan Elite event in Cabo, I think 3 years ago, that Trevor Hammond from Neo Home Loans, we all had to do a presentation to the rest of the group and talk about what I think it was $1 million idea was, right? And Trevor Hammond came up and gave his mortgages under management, but he included all the debt, credit cards, cars, all that stuff. And I remember leaving that event and I decided this is where I have to go with it. And literally for the last 3 years, I've been trying to build it unsuccessfully. I've got bits and pieces of it. I've been trying to do it through Salesforce, and it just failed. I haven't been able to. Well, now that I finally brought on a person that knows how to do this stuff, our CTO is master planning, architecting this. Because you can't just say I'm going to do this without doing all of these things down here, right? And it's coming together, man, and it's exciting. So this is now coming to reality very soon.
Yeah, that's great. And by the way, just to clarify, what I said is we've been talking about this for 25 years, but we haven't been executing well. And
Yeah.
you're right, the technology probably didn't support it. And I mean, the technology is so good today, you and I talked about this, but you can get really detailed reports about your runoff from your mow. Like you every month you get a report of which of your clients you lost, if you
Yep.
can stomach that report. Now it's still expensive data, but there's a
Yeah.
ton of providers today, which is super helpful. And
And
so as we kind of evolve from your mom program, one of the things that anchors your client relationship to your loan officers is your gift program. And you have a extensive gift program. Do you want to share with us what it is?
yeah, it's our always present program that we call it. And it is, I would venture out to say, the absolute best in the entire industry. I've been doing it for over 20 years, but never to the level that it's at now. And what that basically involves is you never miss an opportunity to be in front of your client. That's why you're always present, right? And the way we do it is with gifting. So it starts, let me back up. A lot of loan officers, a lot of real estate agents, when the deal funds and they've gotten a check, they've made money from it, they will give a gift at it and say, okay, that's cool. But what about all the other times? So I'll tell you, we started with that closing gift. We went into a 3 months post funding gift, a 6 month post funding, 9 month, and then a 1 year anniversary. And we thought we were something special. And then it was like, that's kind of silly. And I remember actually Joe Stump talking about this over 20 years ago. And he said, the best time to get a referral from a client is while they're in the middle of the transaction. And for the life of me, I don't know why all of you wait until you've closed the deal to ask for a referral. You should have this referral asking way of doing things built into everything you do. So I thought through that and I was like, he's right. And I always use this one example. If you think right now, when's the last time I saw a 1970s Ford Purple Pinto? You won't be able to remember that. But if you got infatuated with it, like you just couldn't get it out of your head, like that's the next car you wanted, I bet you somehow, some way, you're going to see a Ford Purple Pinto. You're just going to see it, right? And that's how I feel when people are buying houses. Man, you can be in the middle of a crowded restaurant that's at like level 8 on the decimal, and you can't hear your spouse, but 3 tables away they're talking about a kitchen remodel or a new house they're going to put an offer in on. You heard it. Because that's all you think about for that period of time. So in my eyes, this is how it's best structured. As soon as we get a referral and we do a pre-approval for somebody, as soon as we give them that approval, they get their first gift. And that's the very, very beginning. We haven't made money on anybody yet, right? But that's when we give it. If they make an offer and don't get it accepted, they get another gift. And then once they get their offer accepted, boom, another gift. Right before signing loan documents, another gift. Right before funding, a funding gift.
And what are examples of these gifts? Like what would be, give us a few examples.
Yeah. So the very, very first gift they get upon approval has a box about so big. Inside of it, it's got a metal head scratcher, like a little stress reducer type thing. It's got a packet of Tylenol. and it's got these little plastic baggies with a sticker on it, say chill pill. It's filled with M&Ms, and a co-branded letter that basically states, buying a house can tend to be stressful for a lot of people, but you've hired the right people to handle every aspect of this for you. So kick back and relax. But in the event that you do find yourself getting stressed, start with a little scalp massage. If that doesn't work, take a Tylenol. And if that doesn't work, take a chill pill and call me in the morning. Right. So it's something super simple, right? And easy. I'll skip through the next one, and I'll skip through a few, but as soon as they go into escrow, they get a box with 3 mini champagne bottles and 2 glass flutes with another co-branded letter, just basically saying, hey, when you're buying a house, again, and let me back up with this. I found everybody was stressed when they were buying a house because they were told that buying a house is being stressful. And quite honestly, way too many novice realtors are also too stressed out because it's like their only paycheck, which they don't help the situation. And then you have too many loan officers that suck at their job and they didn't help the situation. But I guarantee on our end, we're going to do everything to make this as stressless as possible for you, right? So the letter basically states, I want you, and it gives them permission to celebrate. I want you to celebrate the fact that you just bought your new house. So crack open the first bottle and have a toast to the fact that you got your new house. The next one is when, we always name the loan officer, when Dino calls you and says we're going to be going over the loan. He's going to be going over the loan documents with you because we're basically at the finish line. And the third one, you name the realtor when Susie gives you the keys to your new house, right? And it's in a lot of our messages, we're giving them the ability to celebrate and the permission to celebrate. And it's important that you start them off that way, because if they're stressed, no matter how good of a job you do, they're never going to appreciate the experience that you gave them, right? So doing a good job is just one aspect of it. The psychology behind it too is giving them permission, right? And telling them that this is exciting for them. Like, you must be so excited. Telling them and talking about things that give them, awareness to why they're spending so much money for a house right now, right? They want a place for their kids to play. They want a garage so that they can pull into with their groceries when their kid is asleep in the back seat. I mean, there's a million things there that you can kind of do. One of my favorites, an image is, and it was because it was my image as a kid, the garage door frame had mark on it with, it's like a line with my name on it and how tall I was, along with the date, right? And it started here and it ended way up here. And those kind of images, if I could go back, I would take that door jamb off and replace it before my parents sold the house. That's the kind of stuff. A house is beyond an investment. It's where generational memories are created, and you have to tell them this stuff. So anyways, that's the gifts when we close. And then the first day after funding, they get their next gift, and it just goes on and on and on for a whole 1 year anniversary. And then depending the way we do it, we star rank all our clients, and depending on what star rank they have. And by the way, the only way to get to a 5-star is to refer a client. No matter how awesome you are, no matter how many times you've come back to refinance, no matter how many houses you bought, the only way to be a 5-star client is to refer us business. So a 5-star client, right? And it depends. You could do it for anybody. When your client base gets to be as large as mine, you'll spend a fortune doing it for everybody. So you kind of start limiting it. But my 5-star clients get a gift every 3 months, and that just goes on in perpetuity, right? So that's our always present campaign. And it goes back to, we're going to hit them hard during the moment they get approved to the 30 days they're in escrow to the 30 days they're done, after funding. And that period of time is the most influential time for them in their house buying process, where they will refer you somebody if you ask for it. If you're the dumb one that doesn't ask for a referral until after you've proven how good you are, then it's your own fault that you didn't get that client somewhere in the middle. Once you start doing this the right way, you will start getting referrals from day one. You're not going to wait until you've supposedly proven you've done a good job. You better know you're going to do a great job all the way through, no matter what. Like, your service level is top notch from day one. Don't be afraid to ask.
Dino, you just gave us a lot of gold, honestly. And if we had no boundaries on time, I would really dive into your star rating for your clients, which is awesome. I know we've talked about it before. But the other thing, which I hope everybody caught, the way that you are leading your clients to have the experience that they want to have, you're leading them, you're giving them permission to celebrate, and you're taking away, the stress. All that is so nuanced and awesome. And I hope the loan officer's got a lot of really good ideas on that. But unfortunately, I got to pivot because I really want to talk about how you're trying to monetize verticals. And when I say that, that's probably the most common or popular phrase at conferences today. Every real estate conference, the CEO or the C-suite real estate person saying, we're going to monetize verticals. We're going to monetize verticals. And you have your own spin on it, which I really like. And so let's talk about the things that you're going to try to monetize, and then who are you monetizing them for? And then we're going to finish up, once we get through that, with talking about the revenue sharing income opportunities that you're trying to create at your company. Does that make sense? How do you like that?
Yeah, I got it. Okay, so my goal is, in our changing world, that we need to start being a little bit more aware of and pivoting before it's too late. Because in our new world of technology moving as fast as it is, and it's only going to start moving faster, if we don't pivot fast enough, we'll be out of business. And that's what I'm doing. So I believe the new world of brokerage, the brokerage model, the old traditional one's broken. There's not much longer before it's just dead. The new one is going to be where the loan officer makes money alongside the owners, right? As far as I'm concerned, every loan officer is my partner, right? I'm the leader, but they're all my partners. And with that, I want them to make money across the board on several different verticals. And this is important because all too often, a loan officer constantly struggles financially because he either has a great month or a bad month, or a great year and then a bad year. I mean, we just got off of 2 bad years, right? A lot of people that made a lot of money are now broke. And I don't want them to hate the space. The space is amazing, right? But you got to get a little better at managing your money. You got to get a little better at knowing that it's not always going to be level 10 like it was during the last several years, when we had COVID. But also, let's diverse a little bit, right? And we have the ability to make insurance guys a lot of money. We constantly refer business out to our insurance guy, and it's great. Does a good job for us. He deserves it, just like a realtor does to us, But we want to open up our own insurance branch. And our goal there is basically, we're going to have corporate, right? And then from there, we're going to encourage loan officers to open up their own branch. They have to put up some money to do it, right? We'll put up half the money. They put up half the money. We become partners. Our corporate division will handle the work, but they're going to be referring business basically to themselves. And then once again, right, we have our mom, you're building an asset. Now you're going to have your insurance premium, your insurance book of business, and that's building an asset. That's going to be worth something one day. And then, oh, by the way, if rates ever go up, at least you're getting this continual, cycle of money coming in. Granted, it's not as much as it is in the mortgage side, but once you've done it long enough, insurance is a great business, and it's complementary to ours. We already, refer out so much of that. So insurance is one of them. And that's on the roadmap, guys. We're not there yet. There's different things we are doing now, and we can partner. But the way I'm envisioning it, that's on the roadmap. The second one, which is probably one of my favorites, just because I love this space, but it's the Ethos Capital Fund. And, trust deed investments have and always will be a fantastic way to invest your money. It's funny how a lot of people think it's scary just because they don't know what it is. But let's look at who makes the most money. It's the bank. The bank makes the most money, right? They have the trust deeds. They get a check every single month. So on our end, okay, we're not going to compete with the big banks. We're not going to do, 3, 4, 5% interest rates. But if a person can't qualify at the bank, but has a great loan, then we will step in and do that. Right. And the encouragement, again, because I want partners, is going to be loan officers, take some of the money you're making, move it over, invest it into our capital fund. As we do more and more loans, you're going to be getting a reoccurring check, and it's a supplemental to your main source of revenue, which is your loans. So with that said, you're going to have income from your loans, income from your insurance, income from the capital fund. And oh, by the way, when rates go up and lending tightens up, guess what business also tends to thrive, right? This hard money lending space tends to thrive. So there's that. Last on the list will be a personal loan company, because all too often we refer our clients, just go online, get yourself a personal loan, pay off all that credit card debt, convert it from a revolving account to an installment account. Oh, by the way, your payment just dropped from $800 to $400. Oh, by the way, your credit score just jumped 50 points because all you did was convert it, and the scoring module says we like installment loans, we don't like revolving debt, right? So you got your client approved for a higher home. You got them now a much higher credit score, which gets them a better interest rate, better PMI if they have it, right? A million different things. Why are we always giving that business out? Let's do it on our end as well, right? So we'll start a fund for that and be able to start a little side business there. Micro, we're not talking big loans, right? Anywhere from 5 to 30,000 probably is what our max is. I'm not gonna start pushing down that road just yet. It's kind of last on our list. So the one I'm most excited about that you want me to finish with, and it's the revenue share model. And in this piece, I am like truly excited about. We've gone through great lengths to put this together because it's also a beast of a project to do. But basically, we're saying if you bring in another loan officer, right? Whether you put in a lot of effort, whether you trained them, if you just said, "Hey, Dino, we got a loan officer," and he says, "Okay," and it was that easy, then you're going to make a revenue share split off of his production. And if he brings in somebody, you're going to make money off him. And if he brings in somebody, you're going to make money off him. So it can go wide, it can go deep. And depending, there's a lot of regulations here. We've officially had to register as a company that does this kind of business. I mean, it's a whole ordeal, right? But we had to have an entire plan, entire legal deal, because you got to be able to pay everybody, right? And you got to be able to manage this money. So the software behind it's insane. But there's bonus pools. When you have X amount of when your downline has X amount of people in it, when your downline does X amount of loans, you qualify for these bonus pools. Then you're really making some big money off of who knows how many people wide down at the bottom. But the real basic piece of it, anybody you bring in across the top line, you're making 10 basis points on. And the way the model works, and this is both sides, but the incentive for a loan officer to come work for us, even though you don't get 100%, I like to say you get 100%. But then after you get your 100%, you're responsible for giving 25 basis points to your upline. And then it gets split up based on who brought who in, right? However, 25 basis points, first of all, isn't that much. Like, pricing's darn good, right? But when a loan officer hits 10 million, they cap out. And then they no longer have to pay 25 basis points. They keep all of it. So for the average loan officer that does around 10 million, okay, you're getting a split that's worthy of somebody that's actually really good. But if you are really good and you're doing 20, 30, 40, 50 million, whatever, or more, imagine how much more money you're going to make now. Because as soon as you cap out at 10 million, which for some people can be in, 2 or 3 months, you're making the rest. All of it's yours. So you'll be able to officially make a heck of a lot more money through our model. So now going back to the revenue share, Ron, if you brought somebody in, right, you're going to make 10 basis points. But if they cap out, then you stop making money on them. So the most you can ever make on somebody is $10,000, right? They cap out, you're done. Every year, though, it starts over on their anniversary date. And then they got to cap out again at 10 million. Now, okay, in a down market like this, that's a tall order for a lot of people, right? A lot of people aren't even doing 10 million. But the refi boom's about to hit. I think everybody can do 10 million pretty easily.
Yeah. So there's a whole bunch here.
Yeah.
That we could have spent the whole hour on this, but some key points. Here's first thing. Your company does not have management. There's no middle managers. So you've removed, sales managers, branch managers, area managers, regional managers, division managers, director of sales. And instead, you have a very centralized support platform. Like every employee comes centralized to the platform to get the support they need, and you're building sophisticated systems and all those type of things. Right. And then you're trying to create a whole bunch of value props to your employees, like we talked about, whether it's all the things we talked about, the MUM program, the gift program, the verticals, right? And then you believe you're in the best model, that you have the most flexibility to do loans and you have the lowest rates possible. And then the final piece is you're going to reward people that bring other people into the organization, people that fit the organization's profile, and that becomes a huge driving force. And so you have all this going on, and that's a lot of stuff, by the way. Good for you. We got all this going on. But now on this final piece where you are trying to do this revenue share, and you've worked for the last year making it compliant and getting all your licensing and all that kind of stuff. What drove you to do that? What's the influence to do this? How come? Like, where did you get the idea? Who are you modeling after?
Yeah, man. So like I said, I was on the back nine. I was finally legitimately golfing once a week, practicing once a week, and going out with friends again, and taking my kids to karate at 3:30 in the afternoon, which I have never done. I was in a good place, and I thought I was kind of slowing it down and letting my team run the business. And then I made that one decision to go to a meeting in Newport Beach on December 27th. And a group of agents that I'm involved with down there had the year prior made the switch to EXP because of this same exact model. And then the leader of that group was trying to get them all to switch over to Real. And I was like, man, I can't believe you're trying to get them to do that. These aren't guys that switch around. And he goes, just wait, just come listen and then tell me what you think. And I sat there, and my muse for all of this is a guy named Sharon Srivatsa, or Srivatsi, I can't remember. Anyways, he's the president of Real. And the dude is so unbelievably good. When I sat in his meeting that he was holding to get all these guys to come over, I started taking notes because I was so impressed with just the things he was saying, right? Like one of them that he says all the time that I absolutely love is he says, I'm the president of Real, and I'm here for you. I work for you, right? So he's a great leader because of comments like that. And I started taking notes thinking, I'm going to start using some of this stuff, right? I like it. And then I couldn't keep up. So I just hit record so I could listen to it later and pay more attention while I'm here. And then I left that meeting and I thought, man, this dude is so polished and good as a leader. And I thought, I need to be a better leader, right? I need to take some notes here and do that. So that's how it started. And then it was Christmas and New Year's, it was December 27th, Christmas just passed, but we were basically off that whole week. And on January 2nd, I went for a walk at the Dana Point Harbor with a client / friend of mine that was having some problems in business and just wanted to bend my ear. And then at the end of that walk, he's like, "What's going on with you?" And I said, "Nothing, man. Same old stuff. I got this one little bug in my ear though that I can't let go of. I've been thinking about it lately, but I don't know what to do." And as he asked a bunch of questions, and the more he asked me, the more excited I got. And then he called me back later and said, "Man, that is such a good idea, and I can't get it out of my head." And he's a creative guy, and he created a logo for me pretty much on the fly, like right then and there, and he showed it to me, and then I just fell in love with it, which is basically this E right here. It's the EL for Ethos Lending. And that kind of kickstarted it. And then I have a partner here, Mike, he's the president and CFO. And I called him up and I'm like, "Man, I kind of want your opinion on this, because been rolling through all these thoughts and ideas." And he's like, "Man, I love it. Let's do it." And then I didn't think it was legal to do in our industry, right? Like real estate's a lot easier. So we called our attorney. He's like, "It's totally legal. You can do it. You just got to do it the right way." And that was, I think like January, I don't know, 5th or 6th or something like that. And man, we've been hustling ever since. So since then, we got literally the greatest team I have ever, assembled in my life. We got Ian as our creative director, and he is just making us look as beautiful as can be. We got Mike as our president and CFO that's trying to keep me from spending any more money, because all we do is spend money on technology and legal right now. And then Nancy Davidson, who I worked with for a period of time, but I've known for like 20 years. I've always tried to get her to work for me, but I've never been able to afford her. And then when I could afford her, I have never been big enough for her. So I called her up and said, "I got this great idea. We're going full blast on it." She's like, "Let me come in and we'll talk." And now she's on board. And I can't pay her as much as she would want to, definitely not as big as she needs, but she loves the idea so much. She came on board and she's organizing the back end. She's putting it all together so she can support all the loan officers. And the reason why I love Nancy so much is because, man, when I was a branch manager and loan officer and she was the ops manager, I had never seen anybody fight for a loan officer as much as she did. And I know as a loan officer, I want to know that somebody's got my back, right? Mm-hmm. And Gannon is a past client and friend. And that dude has put together some like seriously cool stuff over his career. And he was at a place where kind of had nothing going on. And I told him about what we were doing. And next thing I know, jumping in 2 feet forward, and he's taken us to a completely different level on the technology side. And even beyond that, I mean, the guy is like the most impressive guy you'll ever meet. And at one time, prior to 2008, he owned the second largest lead gen company in the United States, supporting mortgage brokers and banks. So at some point, we'll be bringing some of that in, but controlled, because we're still going to be a platform of real loan officers. And that's my exec team, man. And without them, couldn't have done what we've done in a very short period of time.
Yeah, it's very impressive. But and so to kind of just summarize all that, if we look at the who's had the most success in real estate over the past few years, the only companies that are profitable, the ones that are radically growing, whether it's EXP, Compass, or Real, you're essentially emulating that model, and that you think that will drive explosive growth. It's all really.
I'm taking Sharon from Real, the president of Real, and I'm literally stalking the poor guy. I watch everything he does. I'm secretly in love with him because I love how he is a leader, number one. Mm-hmm. And then he took in my opinion, or the company, I should say, they took the model like EXP did, right? And the EXP is explosive growth. Like, talk about explosive growth, right? Well, to me, Real is 2.0, right? It's version 2.0. So I'm trying to take the same thing, learn as much as I can from the model, learn from the leader, and bring it all into the mortgage space. And the one thing that I'll say in this brokerage space, in the large brokerage division, the leadership is lacking a little bit, versus in the IMB space, there's better leadership, right? Because there's systems and policies, and it's a little bit more the cowboy Wild West type in the brokerage space. And the thing is I love that cowboy Wild West feel. So I don't want to take that fire out of the loan officers, because I think that's what makes us who we are. But I do want to bring systems into place, because loan officers absolutely suck at systems. And then when you just let them deal with it all themselves, they're not equipped to. They're not equipped to create all of this. So we're creating it for them, and we're going to manage it for them, right? But they're going to pay for it. It's not like it's free. They're getting, basically 100% financing or 100% splits. So it's incredible, right? Like, they're going to have their own business legitimately within hours.
Yeah, Dean, we're gonna have to end on that. I'll be back on because we have so much to talk about. But as we wrap it up on a Friday afternoon on a Labor Day weekend, how do people get a hold of you? Like, how do people follow you, get a hold of you? You have a new podcast coming out called The Way. But how do people get a hold of you? How do they follow you? How do they engage you?
Yeah, thank you. So The Way should be coming out in about a month. We're just starting production on that right now. But you can follow me on Instagram. It's just my name, Dino Katsiametis. Ethos Lending. On the business side, it's Join Ethos Lending. And then Facebook, same thing, just my full name. If you want to email me and ask any questions, it's Dino, DINO, @ethoslending.com.
That's awesome. Dino, you are fantastic. We're up against the clock, so I am going to go ahead and wrap this thing up. Thank you so much.
Thank you.